All right, so today we're diving deep into term life insurance, but with a twist. We're going beyond just the death benefit, and we're going to explore how it can help cover potential long-term care expenses too.
Yeah, it's an interesting side of life insurance that many people don't even consider. Most people just think about providing for their loved ones when they're gone, but you can use it to manage your own health and financial well-being while you're still here.
Right. It's not just for after you're gone.
No.
So for anyone listening who needs a refresher, can you explain how term life insurance usually works?
Sure. So, traditional term life insurance basically covers you for a specific period, like let's say 20 or 30 years. And if you happen to pass away during that term, then your beneficiaries will get the death benefit. But if you outlive the policy, it just expires.
Okay, so where does the twist that we talked about come in?
Well, that's where the extended conversion and chronic illness riders become super important. They offer a level of flexibility and protection that can be really life-changing, as we get older and our health needs change.
So these riders sound like some insider knowledge that could really make a difference. We've got some real-world examples from Clough Financial Group to kind of illustrate how they work, right?
Yeah, absolutely. Their examples paint a really clear picture of the potential benefits.
Perfect. So let's start by talking about the extended conversion rider. What is that all about?
Okay, so imagine you're, several years or even decades into your term policy, and suddenly your health takes a turn for the worse. This rider is like an insurance policy for your insurance policy because it makes sure that you're not left in a bad spot when you need coverage the most. It lets you convert your term life insurance into a permanent one, even if your health isn't so good.
So even if you develop a health condition that would usually make you ineligible for a new policy, you're still good.
Exactly. You get to completely skip the health underwriting process. This means that even if you develop a health condition later on, you can still convert your term policy into a permanent one, and that locks in the benefits. Often, you can actually end up with lower rates than you would if you applied for a new permanent policy at that time.
Wow. So that sounds like a huge win for peace of mind, just knowing you have options down the road. What about the chronic illness rider? That one sounds pretty intriguing.
Okay, so with this one, you can actually use a portion or even all of your death benefit to cover long-term care expenses if you become chronically ill.
So the money doesn't just go to your beneficiaries after you're gone. You can use it for your own care while you're still here. That's pretty huge.
Absolutely. Long-term care can get incredibly expensive. We're talking about potentially hundreds of thousands of dollars, which could completely wipe out someone's savings. This rider helps alleviate that burden, and it can provide you with crucial financial support during a really tough time.
So Skloss Financial Group gives us two examples to illustrate this, Bill and Sue. Can we break those down?
Of course. So both Bill and Sue decided to buy 30-year term life policies with $1 million death benefit when they turned 40. And both policies included the extended conversion and chronic illness riders. Now, fast forward 25 years, and Bill is 65. He's developed high blood pressure and is overweight, so his health isn't quite as good as it was in his younger years.
Yeah, it sounds like a pretty common situation for people as they get older. Would he even be able to get a new life insurance policy at this point?
Well, getting coverage at 65 with those pre-existing conditions would be really tough and probably much more expensive if it was even possible. But Bill was smart because he had that extended conversion rider.
Right. So what happened? Did he use it?
He did. He converted his entire term policy into a permanent life insurance policy with long-term care benefits. And the best part is he didn't have to go through any more medical underwriting.
So he locked in those benefits when he was younger and healthier.
Exactly. And because he was in such good health when he bought the policy, his permanent policy was able to keep a preferred health rating. This got him a much better rate on the permanent coverage than he would have gotten at 65 with his current health. Then a few years later, Bill needed long-term care. From ages 80 to 85, his policy covered $900,000 of those care expenses, all tax-free.
That's a really powerful example of how this rider can just completely take the financial burden out of long-term care. It's not just about the death benefit. It's about actually protecting yourself while you're alive. So did he get any benefit after those expenses were covered?
He did. Even after using most of his policy for care when Bill passed away at 86, his beneficiaries were still able to receive $100,000 tax-free. So all in all, his policy paid out a full $1 million in benefits, all tax-free, which is even more than he initially invested.
Wow, that's
Oh.
incredible. Okay, so let's talk about Sue now. How did things play out for her?
So Sue was in a similar situation as Bill. Remember, she bought the same type of policy when she was 40, but at 65, she was diagnosed with early onset Alzheimer's disease.
Oh, wow. That's a tough diagnosis.
Huh.
Emotionally and financially, I can only imagine how expensive long-term care for Alzheimer's must be.
It can be very expensive. It's a devastating diagnosis for so many reasons. But luckily, Sue had options because she had planned ahead. She decided to convert 50% of her $1 million policy, which gave her $500,000 in permanent coverage with long-term care benefits. Just like Bill, she didn't have to deal with any additional medical underwriting. But this meant that she now had $500,000 to cover potential care costs, and she still had the other half of her original policy in place as a death benefit for her beneficiaries.
So she could really tailor the policy to her specific needs.
Yeah.
What happened next?
Unfortunately, Sue ended up needing extensive care. She used the entire $500,000 from her converted policy to cover all those expenses from ages 66 to 71. While she didn't receive a death benefit from that portion of the policy, the value she got was huge. She was able to avoid paying $500,000 out of pocket for her care.
These stories are amazing. They really highlight the importance of having these riders just to give you options and flexibility in dealing with health challenges.
Yeah.
So let's shift gears a little bit and talk about what this means for the listener.
It really makes you think about your own situation, right? Like, are you adequately covered for potential long-term care needs? Do you have a plan in place to protect yourself and your loved ones from, the financial burden of a chronic illness?
It's not something a lot of people want to think about, but these examples really drive the point home. It's not just about what happens after you're gone. It's about protecting yourself financially while you're still alive, too.
Absolutely. It's all about living with confidence, knowing you've got that safety net in place in case you face unexpected health challenges.
Right. So if someone is listening and thinking, okay, this is something I need to look into, what should they do next?
Well, the first thing I would recommend is looking into policies that offer these specific riders. And definitely have a conversation with a financial advisor who specializes in this area. They can help you figure out what your needs are and guide you toward the best options for your situation.
So it's not like a one-size-fits-all type of thing.
Not at all. The details of these riders can vary a lot depending on the insurance company and the specific policy you choose.
So it's kind of like shopping for anything else. You have to do your research and compare to find what works best for you.
Exactly. And remember, this is a long-term investment in your financial security and well-being. It's not just about checking a box off a list. It's about making smart choices that will benefit you and your family for years to come.
Right. And it's also important to remember that life insurance, even with these riders, should just be one part of your overall financial plan.
Definitely. It's not a magic bullet. It's a powerful tool that needs to be integrated into your other financial strategies.
Like, for example, someone might want to consider long-term care insurance, which is specifically designed to cover those types of expenses. Or even think about strategies for boosting their retirement savings, like maxing out 401k or IRA contributions.
Those are all great points. And don't forget about estate planning. Making sure your will trusts and beneficiaries are all set up correctly is super important.
It's all about creating a really solid financial roadmap that aligns with your personal goals and values. It can feel overwhelming, but talking to a financial advisor can make a huge difference.
I totally agree. It's about taking charge of your financial future and building a strong foundation for you and your family.
Okay, so as we wrap up our deep dive into term life insurance with these extended conversion and chronic illness riders, let's leave the listener with some key takeaways. What are your thoughts?
Sure. First things first, don't be afraid to ask questions. Talk to your insurance agent, a financial advisor, or even friends and family who might know about this. Gather as much information as you can.
Yeah, knowledge is power. The more you understand about these things, the better decisions you can make.
Exactly. You might even discover options and opportunities that you never even knew existed.
Right. So do your research, ask questions, and take control of your financial well-being. Planning for the unexpected is super important, and knowing what your options are is a great place to start. It's amazing to me how something like term life insurance, it seems so simple at first, but then you start digging deeper and you find all these layers of complexity and these hidden opportunities.
Yeah, it's really interesting how these riders kind of challenge our whole perception of life insurance. It's not just about protecting your loved ones after you're gone. You can actually use it as a tool to manage your own health and finances while you're still here.
Yeah, that's a really important shift in perspective. It gives you more control over your future, and you can plan for a lot more possibilities.
Exactly. You have to accept that life isn't always predictable, and you need to be ready to face those challenges head on.
Yeah.
With confidence and financial security.
So Bill and Sue's stories that we talked about, they really highlight the importance of starting early. I mean, they were both 40 when they bought their policies. What do you think would have happened if they had waited until they were 60, or if they were already having health problems?
Well, at that point, their options would be much more limited, and most likely the costs would be way higher. The younger and healthier you are when you get these types of policies, the better the rates will be, and you'll have more time to benefit from them.
Yeah. It's like that saying about planting a tree. The best time to do it was 20 years ago, but the second best time is today. You shouldn't wait for a crisis to happen before you start thinking about this stuff.
I couldn't agree more. Putting things off can really cost you, especially when it comes to your health and your finances. Taking steps now can prevent a lot of stress and hardship down the line.
So if anyone's listening and they've been putting off reviewing their insurance or making a financial plan, this is your sign to take action. What's one final thought you can leave our listeners with as they start this journey?
Okay, well, think of life insurance as more than just a safety net. Think of it as a springboard. It can help you achieve financial freedom and give you the power to make choices that align with your values. Ultimately, it allows you to live your life to the fullest, knowing that you've got a solid foundation to fall back on.
That's a great analogy. So as we wrap up this deep dive into term life insurance, just remember, you don't have to go through this alone. There are tons of resources out there to help you. Financial advisors, insurance agents, online tools, educational materials. It's all out there waiting to be discovered.
And the more you learn, the more you'll be able to make smart choices that benefit you and the people you care about.
Absolutely. That's what knowledge is all about, and that's what the deep dive is all about. Thanks for joining us today. We'll see you next time.